Hi, welcome to the review of round 5. So here, if we look at the scores for round 5, the current points, we see that a number of teams were able to make well over 400 points for this latest round, which is excellent. If we look at the margins, we have teams now entering the 70% gross margin position. Remember, we started at 40%. So most teams should be in the 50 percentile or higher. Teams that are still in the 40 percentile or lower, and we have 1, 2, 3, 4, 5, 6 teams below 40%, which means you're destroying shareholders' wealth. This is bad. And this is something I've stressed in every video, that you need to increase profit margins. And we started in the first year at 40% is where the company started. So we need to move forward from there. And like I stressed every year. So if your company is moving backwards by destroying gross profit margins, investors, shareholders, analysts are not going to be happy with your company, because that's going to reflect poorly in all your based financial ratios. Okay, so if we look at, let's look at total score for the company. Okay, here we go. So this is the total points. So we could see here, we're looking for 2,500, and we have about a third of the class already there. So they've already made their minimum. They just have to make sure they don't lose any points in the last round. And then we have a number of teams that are above 2,000. So if you're above 2,000, you can easily get those remaining points and get the majority of points for this project. The teams below 2,000 need to work a little bit harder to get those points up for the last round. So they really need to put some effort in, which I would suggest reading the student manual, looking over previous emails they sent about the simulation, or watching the previous set of videos I've recorded specifically for this class to help students do better, do well. Okay, so the operating profit margins are now within the 40, going to the 40, even 50 percentile for some companies. So that's good. So let's just look at some of the charts for the industry per team. And now we have, it's going to take a second to render. Okay, let me just make this a little smaller. Okay, so we can see that here. I'm just going to refresh this. We can see that there's a big increase in net profits per team. So we start out, it's refreshing again. So if we see here, we start out here with the net profits, and we see that this company's done very well with net profits, being a leader in most every round. So that's a company to really follow for net profits. But you can see how much the profits have increased when we started out at the $50 million level in net profits, and now teams are approaching 250 million. So that's a great increase in profits. If we look at points per team, we see that most teams are leveling out between 400 and 600 points per round, which is what we wanted to maintain our total 2,500 points for the simulation. So most teams are doing well. Some teams have lost points, which is not good at this point. Not much has changed in the total stock price. So we have the same couple of companies here at the total stock price, the high end. Sales, looks like we have the go-getters here back at the top of sales, followed by these three companies. So getting close to $1 billion in sales, which will probably reach next round. Earnings per share, quadruple Z is in first place, followed by SimCar and Chief Auto. So that's very good. So the companies who have their flat earnings per share or declining earnings per share, this is how you lose points, because you want to maximize shareholders' wealth. Companies are made to increase sales and, more importantly, increase profits. Okay, so that's sort of a roundup of the simulation. Let's look at an example of this is an individual company. So you should see that sales have been increasing for your company, profits have been increasing. Your sales versus profits, we want to see both of these in the upswing, and of course, stock price, earnings per share, all these things we should see in the upswing. Now, points are going to naturally change, but as long as your average is on target, saying that you're around 2,000, 2,100 points by now, around 5, you're doing well. So this is the sample company we're going to look at. So if we see here, we're looking at the overview points. We see that revenue went up by 39%. Quick ratio, the debt ratio is improved. 30 points are earned about in each of them. And net profits went from 60 to 67%. So we see that we're going up 4 to 5 percentage points in each of these categories, which yields a lot of results down here when we're talking about total asset turnover, equity multiplier, return on equity, earnings per share, return on assets. These are all involved with the profits. So if we're getting these profits up, we're going to be earning points in these areas. Market capitalization has to do with increasing stock price, which again is related to profits. Book values increased. The forecasting was close. You're never going to make a lot of points in forecasting. You just don't want to lose points in forecasting. So if you're kind of flat in forecasting, that's not bad. Operational investments went up by 42%, and a surplus was earned. So that's how that 471 points for round 5 was created. The personal assessment can be reviewed to see how each category you did, and in very descriptive terms, plus getting some inside information by clicking this informational link here. Charts we reviewed together. Industry is where you can get details on your competitors. Financials will back up your financials every year, and of course you start again at sales. So at sales now, I want to again start building my cars based on making improvements to my overall product. Now, when it comes to the sales forecast, like I've always said, I look to the student manual to help me out with the sales forecast. And a student manual is not telling me exactly what the numbers are going to be, but they give me a good reference point of where they could be, if ever, as an average sales point. So this year 6 is what I'm aiming for. And I can see because the markets increase relatively fast, as far as these percentages we see here, it's no doubt that these amounts are going up quite nicely over here. So that's going to be sort of my basis. And I have to make a judgment call as to whether or not my cars are going to be more competitive or less competitive. And this deals with, how I'm putting my product together, my sales price, the amount of marketing I'm spending. So these are all things that, we want to look at and think about when we're making these cars. And again, I wouldn't put my exact numbers in. I'm just throwing some numbers in to get an idea. And here, there's no real increase in profit margin. So I'm not particularly happy with that. So I'm going to just adjust a few things. To increase, yes, so as long as I have an increase in my profit margins, I'm happy with that. So I'm just going to tweak around a little bit because it's all about increasing profits and increasing profit margin and in sales. So So again, this is a nice increase. So I'm not looking for miracles here, but I'm just trying to remain competitive and at the same time be able to meet my sales goals. And also keep up with the customer expectations that they've been increasing. So if I have a situation here where there's no gross profit percentage increase, I'm going to look to modify my statistics a little bit to try to get to a higher profit margin. Okay, so 3 to 5 percentage points is sort of what I'm shooting for here. I'm going to skip over marketing. I'm going to skip over marketing and go right to production because marketing takes a real long time. I don't want to bore you with that. But in my marketing, I'm going to buy new factories where I need it. Current inventory can be resold. So I'm always putting in whatever my excess shortage is as my production goal because I always want this to be zero. There's no reason to buy things that ask for cars to be built that I didn't plan to sell. So I always want the excess to be zero here. And I see that I'm already maxed out on all the operational cost reductions. Okay. So then when I get to the last page, the finance page, I'm going to look at, okay, I have a nice surplus here. So I can afford to buy back, retire some long-term, short-term debt. I can't retire all of it, but whatever amount I am able to retire, I'm going to try to retire. And I'm going to buy back some shares. Okay. And then I'll just complete the round. Okay. So that's just a quick synopsis of how I would complete round 6. Now, I wouldn't copy my numbers exactly, but just keep in mind what I'm stressing. The main points I'm stressing is that I'm going to be improving. So if I go back to review my game, I'm going to be improving my sales and profits. And that's what investors look for. And that's what I'm in competition for. So if I go to the finance page, I can see that. Are my sales increasing? Yes. Are my profits increasing? Yes. So that is my main goal. Do I have enough? So you're going to really wind up with mostly a large surplus in that last round. And that's okay, because it's just the way it is. So that would be my suggestions. Now, of course, throughout this whole video series, I've been sort of your coach, your mentor. I'm trying to get you to the best position, highest score you can get in the game. So that's why I've taken the time to review each round, give suggestions, show you some of my inputs. And by and large, most teams are doing great. So if you look at the overall, let me just sign it again. If you look at the overall results for the simulation, you see that the percentile rank is important to look at. So if you look at the percentile rank, which is up here, this is the, let's see if I have to make I think it's because I have this squeezed a little bit. Let me refresh this. So if you look at the percentile rank here, this is the percentile rank in this column. This is just not labeled properly, but you see that a lot of teams are at the 90 percentile or higher for a lot of the categories. So this is what you want to look at. If your team is scoring above 90 percentile, you're doing really well in the simulation. So if we look at total points here, so far for total points, we have many companies are already in the 90 percentile total points. So as a class, we're doing very well compared to the averages. And of course, these percentile ranks, when I last checked, they said it was based on the past 5,000 teams that have played the simulation. So we're definitely performing at a very high level of this class, which I would expect for NBA level class. Okay, so that's my review of round year 5 or round 5, and my suggestions for moving forward round 6, our last round. So I wish everybody the best of luck, and I will talk to you soon. Thank you.